Okay, so today is going to be section 1 of 6. So this is the first QuickBooks Online Payroll Certification Exam video that I'm getting out since the new update at the end of 2022. So we're going to see a lot of the same questions in the first couple of sections, but kind of scrambled around. So I'm going to focus in on just the ones that you'll see for section 1 here. So if you go to the training library, we'll see they revamped that as well. That user interface has changed quite a bit. Now there's 4 tabs, and the 4th tab over is the training library. And when you scroll down, you'll see Payroll Fundamentals. And Payroll Fundamentals has 2 sections. Now you have to scroll all the way down to the bottom to get those. And so you have the Intro to Payroll and Calculating and Reporting Wages and Taxes. And then the Intro to Payroll has the following modules: the Payroll Specialist, the different types of employees complying with the Fair Labor Standards Act, and payroll compliance beyond the FLSA, and payroll records and retention. So this is basically what you're going to see in sections 1 and 2. Maybe some of them might sprinkle into 3. The other one is calculating and reporting wages and taxes, and that's calculating gross wages, payroll taxes and workers' compensation, understanding payroll deductions, understanding payroll benefits, working with fringe benefits, and preparing payroll deposits and returns. Now, if you were to go to the payroll training itself, that's where you'll see, solutions and setups, and then this would be the first part of that. I think it's like a 4-part. And that's where you're starting to get into sections 3, 4, 5, and 6. And then once you finish that, you go down to time. So that is going to be the later sections of the exam. We're only going to be focusing on the first part, the payroll fundamentals, in sections 1 and 2. All right, so the introduction to the payroll process. So for sections 1 and 2, as I just said, we'll be looking at the payroll fundamentals. Payroll is a compensation a company must give to their employees on a regular basis in exchange for their services. A few companies hire a payroll clerk to complete their payroll process. However, many small businesses don't have the time and/or experience to maintain their own payroll records to complete the payroll process, or maybe they can't even afford to hire a payroll clerk. So thus, many of them choose to hire a third-party payroll company to take care of the payroll functions like Gusto, ADP, Paychex, Deluxe. And then now we're seeing QB Payroll is gaining a little bit more popularity and being pushed a little bit more by Intuit. So those are just a couple of examples. Let's look at what a payroll specialist is. So payroll specialists provide a wide range of services, including collecting timesheet data and payroll information, entering data into payroll systems and administrative databases, calculating wages, benefits, tax deductions, commissions, and etc. Although for the most part, the program does it. If you have a payroll program that you're using, a software program, they're going to do that. But you need to have the basic understanding of it to be able to catch any errors that might have possibly occurred. So you do need to have the theoretical part down so that you can catch anything that you think doesn't look right. Preparing and processing paychecks and cash deposits, maintaining accurate records of payroll documentation and transactions, preparing and distributing income statements, responding to payroll-related inquiries and resolving concerns. So if like somebody calls, let's say you work for Paychex, one of your clients might call and say, well, we have somebody's questioning their paycheck, and you can go through or resolve any concerns they may have. Performing account balance and payroll reconciliations, preparing financial reports for accounting and auditing purposes, preparing periodic payroll reports for review by management, ensuring that state, local, and federal tax compliances are met. Minimum requirement to be a payroll specialist includes, to some degree, just a high school diploma or GED, I would say, if you work for a private. But if you want to work for one of the larger firms like Paychex, they prefer at least an associate's degree in accounting, business, or related fields. But initially, and I think that's something that's happening maybe in the last 5 to 10 years, I think couple of years back, it just was simply having a high school diploma or GED. You had to get trained, at the company you were working in. You need to have a minimum knowledge of 5 years working in payroll or a similar field. So again, you might be working for a company, they brought you into the payroll department, you've been, a clerk or an assistant, and after a while they decided, okay, we're going to promote you, and then they train you to become a payroll specialist. Again, you could just have your high school diploma, you just gained the knowledge from your job. working knowledge of basic accounting principles and payroll best practices, and proficient with specific payroll software, obviously whichever software your company is using. Now, you will see this in that section that I showed you, but it will be discussed in section 2. So I didn't go over this, but the 6 pillars of a payroll process. So just the visual picture that they have there in the training. But once you see I put here section 2, I might still include it as it flows into what I'm presenting here, but there aren't any questions on it. So I didn't go into detail in this one. I'll have to revisit some of the stuff again in 2 as well, because some of the questions overlap. Potential issues of poorly managed payroll. So what happens if you have a payroll clerk or the company you're using is making several errors? What are the potential issues of having a poorly managed payroll? Productivity. Less motivated or less engaged employees usually perform at a much lower level than a motivated employee. So if your paycheck is not right and it's happening on a regular basis, your employees might, feel a little like, I don't really care for this job. I'm gonna get my resume together and go somewhere else. Employee retention, so it kind of goes hand in hand. Employees who worry about their wages are more likely to leave a business and seek employment elsewhere. Damage to reputation, poor performance, and high attrition can affect a business's ability to serve its customers. This can seriously damage the reputation of a business. So if you have some red flags or you've gotten fined because of, poorly managed payroll, people not getting paid correctly, people start talking and say, I wouldn't work for them. They really mess around with people's pay. So you don't want to damage your reputation. Recruitment. When people hear about issues, when employees are getting paid correctly, that attracts better talent to come and want to work for you. So if they're saying good things, that'll attract. If they're saying bad things, it does the opposite. And, people aren't going to want to give you a chance because they're afraid that they're not going to get paid correctly. And the last one is costly penalty. And I think this is the number one motivation for companies to make sure they do everything correctly, because you can get federal and tax fines, penalties, and other consequences, maybe even jail time if it's something that you were stealing from employees. So here are some questions you might see in this section. What are the 5 potential issues that could be caused by poorly managed payroll? Well, that just said, what are the potential issues? There's 5 of them. I just named them, so that's why I said 5. But the question probably is only listing 1, 2, 3, maybe even 4. I don't know. But just have them all in your notes. So I had them over here, productivity. But if you see, I put over here, and their definition. So meaning there might be questions where they don't say productivity. They might say less motivated or less engaged employees. So for that, you want to make sure you have in your notes not just the potential issues, but their definitions as well. So have both of those there so that if you see the question on poorly managed payroll, you might need to go beyond just this. You might go into need to answer the actual definition of it. What are common requirements for becoming a payroll specialist? Having a high school diploma or a GED. I did mention, some of the companies now are asking for associate's degree, but it's still not a definite requirement, so it didn't make the list here. A minimum knowledge of 5 years of working in a payroll or a similar field, working knowledge of basic accounting principles and payrolls, best practices, and proficient with specific payroll software. And the last question, which services would a payroll specialist be expected to provide for a client's company? I just went ahead and wrote all of them. This is all of the services that are expected of a payroll specialist that were listed in the training. Go ahead and write them all in your notes. Like I always say, it's always good to have more notes than less notes for your exam. So go ahead and write them all down. And again, you don't know. They might have 2 or 3 of them, or they might say which one is not. So they put several of these and then they'll throw one in there that doesn't pertain. Just have them all in your notes and you should be fine. So you might want to take a little, pause and write this down or take a screenshot. Okay, payroll process, an employee versus a contractor. So an employee is someone a company hires and places them on their payroll. Employees must fill out certain forms during the hiring process once employed, and then they'll receive wages and benefits in exchange for their services defined in the organization's guideline and in the employee's handbook. So we'll look at those, once you're the hiring process, what forms you have to fill out, and the deadlines and the process of that. That's going to be for section 2. The other type of person you can hire is an independent contractor. So an independent contractor is an independent worker who is providing services or goods to a company and get paid an agreed upon amount, but does not receive benefits such as health insurance or paid time off. Employees and contractors must fill out certain forms for tax reporting purposes as well. So with a contractor, even though they're an independent contractor, they also have to fill out forms for you. And again, we'll discuss that in the next section. And for each of the forms are different. So for employees, they fill out one form, contractors, they play another. And we'll discuss that in section 2. The IRS distinguished the difference between employees and contractors by classifying their work status by 3 categories: behavior control, financial control, and relationship factors. And then I have them down here. Now, under independent contractor, you do have statutory employees and statutory non-employees. Now, they didn't discuss statutory non-employees. They only, in the training section, talk about statutory employees. So, according to Wikipedia, statutory employee is an independent contractor under the American common law who is treated as an employee by statute for purposes of tax withholding. So, you're going to withhold OASDI and HI, which is also known as Social Security and Medicare taxes. There are 2 conditions that must be met. One condition, the first condition, means they have to fall under one of these 4 categories. They have to be a driver, and that's someone who distributes beverages other than dairy, so it can't be milk, meat, vegetables, fruit, and bakery products, or a driver that picks up and delivers laundry. Then you have a life insurance salesperson, and that is someone who is selling life insurance and annuity contracts for a company. And then you have a remote worker who works from home. You have to read because they go a little bit more into detail on those specific cells of a remote worker that falls under statutory. And then a traveling or sales individual who works full-time on behalf and turns in orders to a wholesaler, retailer, or contractor. So the other one, all right, so the second condition, so that was the first condition right here, and you had to have at least one of these 4. But in the second condition, you would have to have all 3 of these conditions met. So that's the service contractor, the service contract states or implies that substantially all of the services are performed personally by the worker. The worker performs the services continuously for the same payer. So I think that's a key here, continuously. So it's not just a short job, like we have this one thing we need to do and that's it, or you're only working for a couple of days. So that would not be a statutory employee. This is someone who's continuously working. And then a worker that does not have a substantial investment in the equipment or materials they are provided with, to perform the service. So they're not, so if you're driving a truck, going back to that driver, the truck actually probably is owned by the company. You're just a driver. So if the worker meets all 3 conditions above and falls into one or more of the categories listed in the last slide that I've read, then they would be classified as a statutory employee. There are 3 key factors that you must consider when classifying employees. So we're going to look at employee classifications in the next couple of slides. The 3 things you're going to look at and need to consider is duties. Understanding the duties the employees will perform will help you to decide if they're exempt or non-exempt as employees. Hours, qualifying the number of scheduled or unscheduled hours employees work each week will help determine if they are full-time or part-time. If they work more than 20 hours, they also could be eligible to receive benefits. And then the last one is duration. Defining how long the employee will work for the business may also help to determine if they should receive benefits or not. So we have a couple of tables that were, in the training section that I brought over in here into this video. This table, along with more information covered in the training section, should have enough information for you to know how to confidently classify workers. So here it says the type of work, and they split it up between full-time, part-time with benefits, part-time without benefits, and then other, which goes under on-call, interns, and seasonal workers. So then it talks about the number of hours and the work duration, and whether or not they should be eligible for benefits. So this part here is in section 2, and it talks about exempt versus non-exempt employees on taxes, or on certain benefits as well. So let's look at this. Once a worker has been classified as an employee, the next step is determining whether or not they're exempt or non-exempt. The key difference between exempt or non-exempt employee is that a non-exempt worker is entitled to minimum wage and overtime requirements. Now, they didn't have a specific section in the the training section that went into detail with exemptions. So I actually have something up here when we get to that part so we can look at it from the Department of Labor website. Exempt employees are not usually eligible to receive overtime pay and are typically excluded from minimum wage requirements. Key attributes of an exempt employee include a salary at a fixed rate, so probably something like an administrator or a job at which you're getting a set amount, usually within a certain amount of time. So like I was a teacher prior to working at the college I'm at. Like I'm talking about a school teacher, and school teachers actually fall under this because we don't have the same 9 to 5 as everybody else. We usually work 8 to 3 or 3:30, and we get to usually scheduled breaks and so on. So our overtime would be different because we don't work a 40-hour work week. So sometimes there's situations where you wouldn't fall directly under the regular overtime and minimum wage requirements. Here's another one. Salary amount that meets the minimum wage threshold as deemed by FLSA. Typically more professional roles that require a higher level of expertise and knowledge. Example of roles could be often include but not limited to human resource professionals, accountants, CPAs, attorneys, and others that deal in more specialized or compliance fields. Non-exempt employees are generally blue-collar, hourly rate employees who must be paid an overtime rate of 1.5 times their hourly rate. Key attributions of non-exempt employees include, but not limited to, they earn an hourly rate that can vary. They charge or keep time. They're typically non-professional roles that require a lower amount of expertise or a certification level. Examples of this type of role would be commonly, but not limited to, warehouse workers, contractors, freelancers, interns, retail associates, servers, if you work at a supermarket, and so on. According to bizhaven.com, exempt and non-exempt positions have several differences. Exempt employees are typically paid salary, while non-exempt employees are typically paid hourly and receive overtime. And then they said the three employees that fall under exempt are usually salary thresholds, like they make a certain amount, or white collar duties, like you're an executive, or independent judgment. So the duty tests require, I had mentioned this the first time, but I just thought this was a good article. BizHaven just kind of goes over it pretty thoroughly and defining it a little bit more. Not that you necessarily need it for the exam, but if you were interested in understanding the difference between the two, they go in a little bit more deeper on this topic. Consequences for misclassifying workers. This is in section 2. So if the IRS determines that an individual has been misclassified by their employer, it may level penalties against that employer, including, but not limited to, a $50 fine for each W-2 the employer failed to file, a penalty up to 3% of wages, 40% of the FICA taxes that were not withheld from them, and 100% of the matching FICA taxes that they should have paid. So we're actually going to go over this in section 2 again, and I have a little visualization for you. And then this is the visualization that they had there, showing you, the $50, the 3%, the 40%, and the 100%. Again, I'm going to revisit this in the next section. Additional fines and penalties. So then it goes on to saying criminal penalties of up to $1,000 per misclassified worker, or even up to a year in prison. So we're getting into serious stuff. I mean, we saw that back in the day, a couple of decades ago, when we, saw people fixing the books, Arthur Anderson, and so on. So, yeah, now the government is saying, yeah, we're going to come after you. We might even put you in jail if it's found that you're doing things illegally. So it's not worth the risk. Here's another section that I think they took out of the exam, but I still wanted to keep it in here. In the event that a company does misclassify an employee as a contractor, and that's the main, I think this is the main thing that they're looking at, the Department of Labor, and they're going to look and make sure you don't have that employee as a contractor when they clearly fall under an employee status. So they have like an out for you. It's called the VCSP, the Voluntary Classification Settlement Program. So this is your first time, and they think, you just didn't know, and they're going to give you some sort of pardon, not a complete pardon, but you get partial relief from the federal employment taxes. So if you qualify for it, you fill out Form 8952. That's the application for this program. And if you qualify, then they'll work with you to avoid some penalties, maybe not all. But I just mentioned that because I think it was originally on the exam, but it was taken off, and I still, you never know, it might be brought into the database at some point. So here's some examples you might see here in this section. And again, some of that stuff, or more than half of it, I said I'm going to revisit on section 2 because they took it out of section 1. Your client hired an independent bookkeeper to help them reconcile their bank statements. The project is going to take about 2 or 3 days, and it only needs to be completed within the next week. They're going to pay you $25 an hour. Okay, and then the new hire needs to use the system. What would this person be? They'd be an independent contractor because you're only hiring them for a couple of days. It's for a set amount, and then once they're done, they're done. So that's an independent contractor. An employee who works for a struggling business that has cut everyone's hours from 40 to 25. So everybody was working 40. What's that? Full-time. And now they're working 25. They're part-time. What type of employee should that person now be classified as? Part-time. Your employees are now part-time workers. They went from full-time to part-time once you took them from 40 hours to 25. What 3 factors should be considered when determining how to classify a worker as an employee or a contractor? The 3 factors are behavioral control, financial control, and the relationship. Which individuals can be classified as a statutory employee? Remember, we said that was the first. These 4 right here. So I don't know if they're going to ask a question and there might be 1 or 2 or 3 or 4, but make sure they fall under this. Okay, so the driver, remember they're not doing dairy milk. The product itself, they're saying the beverage milk, meat, vegetable, fruits, bakery, or they pick up laundry. Or an insurance salesman, or a remote worker, or a traveling or sales individual who works full-time on behalf and turns in orders to a wholesaler, retailer, and contractor. By the way, newspaper delivery people do not fall under this. A company wants to hire a technical writer to write out a section of their employee handbook. The writer has to meet with management to understand the new policy, and they'll be paid a flat fee. That's a key right there. They're going to get a flat fee. So usually, they'll say, well, we're going to pay you $1,000 for this, and we'd like to get it done within a month or 2, whatever it may be. That person would then be an independent contractor. Okay. Basic payroll compliance. At a basic level, payroll compliance refers to the necessary steps that every employer must take to ensure that all tax regulations, wages, and hour rules, as well as other requirements related to payroll, are followed. These steps include, but are not limited to, maintaining the proper forms for each employee, collecting the proper withholding, using the correct tax rates for the business, collecting and filing garnishments, observing federal and state overtime rules, filing all federal and state payroll tax returns. Payroll specialists must understand the Fair Labor Standards Act, FLSA, and be able to apply its guidance to real-life situations. The FLSA is a U.S. law that is intended to protect workers against certain unfair pay practices. The Act provides a rule book that covers how employers must properly and fairly treat employees in the private sector and in the government, federal, state, and local governments. The Act is maintained and carried out by the Wage and Hour Division within the United States. The primary focus of this Act is to control the national minimum wage and overtime pay, standard work week and hours worked, child labor standards, and payroll record keeping. The FLSA manages minimum wage and overtime pay. The minimum wage is currently set at $7.25 per hour, and this was established in 2009. Many states have changed their minimum wage laws to enable an increase over the years. However, 5 states have continued to maintain the federal wage of $7.25. So there's only 5 states that do that. All the other ones have implemented higher ones. In cases where an employee is protected by both state and federal minimum wage laws, the employee is entitled to the higher of the 2. So meaning if, let's say, I don't know what, I know New York City is $15 an hour, but let's just pretend New York State was $15 an hour. That would then be, that employee would be protected by that $15, meaning an employer couldn't give them $7.25 if the state minimum wage. So whichever one is higher, the company has to abide by. So that's good. because I can't imagine getting paid $7.25 an hour in today's economy. The act is maintained and carried out by the Wage and Hours Division. While the FLSA does set basic minimum wage and overtime pay standards and regulates the employments of minors, there are several employment practices that the FLSA does not regulate. I'll talk about that in the next slide. And then I also want you to note I didn't get to read that. The federal minimum age is set by the U.S. Department of Labor. So although they do regulate child labor, the actual minimum age requirement was set by the Department of Labor. All right, so the FLSA does not regulate the following: vacation, holiday, severance, or sick pay, meals or rest periods, holiday offs or vacations, premium pay for weekend or holiday work, pay raises or fringe benefits, or a discharge notice, the reason for discharge, or immediate pay of final wages to terminated employees. So these are not, they do not fall under FLSA regulations. Note, for some overpay, unless specifically exempt, employees are covered by the Act and must receive overtime hours past 40 hours in a week, and they should receive no less than 1 1/2 times their pay. So here were the exemptions, and I said they didn't really, they just kind of gave it one sentence in the training. I'm hoping that this page is still here where it talks about the different ones here. So these are the ones that are exempt for, this is overtime only. Let me come up here. This is minimum wage and overtime. So minimum wage and overtime would be administrative, as I said, but it didn't get too much into it. But here in this Department of Labor, DOL.gov, teachers, academic administration personnel, and elementary and secondary school levels, outside sales employees, and employees in certain computer-related occupations, seasonal amusement park and recreational establishment employees, farm workers, and casual babysitters, and persons working with companions like elderlies in their house. All right. Record keeping. So under FLSA, they require employers to keep records on wages, hours, and other items as specified in the Department of Labor record keeping regulations. Examples of information that payroll specialists are required to retain, especially when it comes from employees who are active or even inactive. That includes their full name, social security number, their address, including their zip code, their date of birth, if they're younger than 19, their sex and occupation, the hours worked each day within the work week, the total wages paid each work week, their rate of pay, including their regular and overtime rates, any additional deductions from employee wages, total wages paid for the pay period, as well as the date of the payment and the pay period covered in the payroll window. According to the Department of Labor, employees must maintain basic record keeping of the information shown in the previous slide, but how long does an employer need to keep it? The FLSA requires that they keep their file records for at least 3 years. Records used to compute pay should be kept for at least 2 years, so like time cards, work and time schedules, or records of additions or reductions from wages need to be held for 2 years. So default hours by pay period. So we look at annually, quarterly, monthly, semi-monthly, bi-weekly, and weekly. And then how many pay periods. So weekly is 52, because there's 52 weeks in a year. Bi-weekly means every other week. You take 52 divided by 2, and that's 26. So 26 pay periods for someone who gets paid every other week. Semi-monthly, so let's say the 1st and the 15th, that would be 24 payments a year. Once a month, they would get 12 payments. Quarterly, they'd get paid 4 payments, and annually would be 1 payment a year. If the business is a parent sole proprietorship or a partnership in which each partner is a parent of the child. So they're saying, can an owner hire their own child? It looks like they took these questions away from section 1. I'm not sure if they have any in section 2, but here is what it falls under if they want to hire their own child. Payment for the service of the child are subject to income tax withholding regardless of age. Payments for the services of a child under 18 are not subject to Social Security or Medicare taxes. If the child is 18 years or older, then payments for services of a child are subject to Social Security and Medicare taxes. Payments for the services of a child under 21 are not subject to FUTA. If the child is 21 years or older, then payments for the service of the child are then subject to FUTA taxes. Note, wages paid to a parent by their child are not subject to FUTA. All right, child labor provisions, non-agricultural. So this right here was the chart that they had before. I just went ahead and still used it. And you'll see there here, these two right here are the restrictions for 14 to 17-year-olds. And I have another one. This is the new one that they have, the new table. This is non-agricultural that you see in the training section. Okay. And then here are farm labor. So farm labor for children. This was from the previous training. We brought it over. And this is the one in the new training. Permission farm labor for children. All right. How business owners pay themselves. It's common to hear business owners talk about getting a salary from their business, but it's not actually how most business owners get paid. How business owners distribute money from their business depends on the business type. How business owners, these are the several factors that it falls under. The type of business, the stage of business they're in now, how much they need for personal expenses. Business owners can take a salary and a draw or distribution of profits for any amount they want from their business. Of course, money that's needed to pay employees, pay off business loans, or pay other business bills shouldn't be taken. A difference between a draw and a distribution is significant for tax reporting purposes. The main difference between a draw and a distribution are a sole proprietor or a single member LLC owner can draw money out of their business. This is called a draw. It's an accounting transaction and it does not show on the owner's tax return, and no taxes are deducted, meaning no payroll taxes are deducted. A partner's distribution or distributive share, on the other hand, must be recorded using the Schedule K-1, and it shows up on the owner's tax return. In the same way as a partner, a member of the multiple owner LLC and an S-Corp shareholder takes a distributive share, which the amount recorded on there would be the Schedule K-1.4. And an owner of a C-Corp or an S-Corp is a shareholder. As a shareholder, they take a salary and dividends when the corporation board decides to pay them. And then I put over here on the bottom as a side note, single member LLC owners are considered sole proprietors. So we said over here sole proprietors and single member LLC. And so they take a share. Multiple member LLC members are considered partners in a partnership. So they would take what you call a distribution. So this is a table that they had. I liked it, so I wanted to keep it. Where you can see C Corp and S Corp owners are the ones that qualify to get a W-2 salary. These other ones, it's a draw or a distribution for multiple. And I have a side note here. I knew that they had a question. I don't know if they moved it to section 2 or they took it out altogether, but I still wanted to look at it. Health and accident insurance premium paid on behalf of an S Corp shareholder employee are deductible by the S Corp and reportable as wages on the shareholder employee's Form W-2 Box 1. And they're subject to income tax withholding. Now, just know this distribution here under the S Corp, those are payroll tax free. So they're not paying taxes on them, like, you know, the federal or the state or any of the tax that goes under payroll, that's tax free. The W-2 gets taxed, but the distributions do not. So here's some questions, and these are the last questions that I go over in this section. There are some slides you'll see at the bottom, but I'm not going to go over them because they get pushed over to section 2, all of them. So there are 4 standard payment schedules for wages, and each provides the employee with different numbers of paychecks throughout a calendar year. What is the correct pay frequency with the number of paychecks issued for those 4 standard schedules? There's a couple of questions like this, but basically they're all going to be the same. It's going to be weekly is 52, monthly is 12, bi-weekly is 26, semi-monthly is 24. If they say annually, it's 1. If they add in quarterly, it's 4. Which information is not required to be maintained in an employee's permanent file? So I gave you a list of all of them, just to go back to that slide so you can see what I'm talking about. There was a list of all of them. And so they might ask you a question like, what is not supposed to be in here? This is the list. So make sure you have this list. But so I would just have all of that down in your notes. And then so if they ask the question, you can, clearly see what is and what isn't. But a question, if they threw something in like marital status, because that was not down there, marital status is not required. Which 3 employment practices are regulated by the Federal Labor Standard Acts? They look over basic minimum wage, overtime pay, and employment of minors. Some employees are exempt from both minimum wage and overtime pay. This was that article I showed you. What 2 types of employees out of that list? These were the 2: outside sales employees and teachers. But remember, I showed you that page. Hopefully you took a little notes down. There's more that qualify. I don't know. There's other questions out there, but these 2 do fall under the exemption: outside sales employees and teachers. Under the FLSA, how is the work week defined? It's any 7 consecutive 24-hour periods starting at any day or time. So 7 consecutive days, 24-hour periods. For which 2 entities will funds paid to an owner for work performed be included in payroll? So that was those W-2. I showed you that. It's the S Corp and the C Corp owners. They might have it like, a multi-member S Corp. As long as it says S Corp and C Corp, those are the owners that can get W-2s. Your new client is a single member LLC, which is Schedule C. That's like a sole proprietor, with 3 part-time employees. So your new client is a single member LLC, which is like a sole proprietor, and they have 3 part-time employees. And they all work at the business. So the owner and his 3 employees. Who gets paid? Well, the owner should be processing payroll for those 3 employees, those 3 part-time employees, and he himself will do a withdrawal of the monies. He will not be part of payroll, because remember we said it's only S Corp and C Corp that can get a W-2 and be paid a salary. Your client has been an employee for his S Corporation for 10 years. He plans to take $225,000 out of his business next year. And in that $225,000, 75 is distributions. How much of that is non-taxable? So remember I said distributions is payroll tax free. So that's 75. That 75 will be non-taxable. Which agency within the U.S. Department of Labor enforces the FLSA? That's the Wage and Hour Division. How many states still follow the federal minimum wage? 5 of them. 5 states. What is the minimum age for minors to work in non-agricultural work? 14. They have to be at least 14 years old to get a job outside of the family farm. Is there another? Yes, there's one more page. Your client asked if they can hire their children to work in the business and not have to pay taxes on their behalf. What circumstances would that be true? If the client is a sole proprietor, they can hire a 16-year-old child, but she will need to withhold federal and state withholding. Or if the client is a single LLC reporting on Schedule C, they can hire their 19-year-old child, but will need to withhold Medicare, Social Security, federal, and state. And the last question is, which federal agency regulates the federal minimum wage? That would be the Department of Labor. Wait a minute. Which federal agency regulates the federal minimum wage? No, I think that's supposed to be the federal minimum age is set by the U.S. Department of Labor. So I think that's the age, because the federal minimum wage laws are enacted under the FLSA. So I think that has to do with the age. Although I believe that was at the end too, because I think they took that question off. So those last couple questions I believe might have been taken out. And then these last slides I have here, I go over the forms. I'm not going to do that until section 2. Actually, I was about to go over and I thought, well, the rest of it all is in section 2, so I'm not going to. I'll revisit again soon. So 2, hopefully I can get out in the next couple of days. If you see anything that I missed, please put it in the comments. Thank you for watching.